Well, good evening, all. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening of Monday, the 4th of August, 2025, about 6:35 p.m. Central Time. I'm wearing, by the way, my Condiga shirt. If any of you are car guys, I went over there. I did see in Salt Lake City a couple of years ago, visited the facility there. It's one of the best car shows, and certainly if you're a car enthusiast, something you want to see for the resto mods and what they build. Away from all that, we have more data coming out tomorrow we should look at. Today, the only thing you really had were some earnings reports, his and hers, him and hers, as they call it. And then we've got we had Palantir, which was pretty good, and that gave the stock market, especially the NASDAQ, probably a little more of a bid in the evening trade. Tomorrow, what we get is a little more than that. Let me see if I can get this to come. There we are. You're going to get the June trade balance data. That comes out Tuesday at 7:30. You're going to, and by the way, they're looking for a 10 billion drop. We were in the 70 billion range, now looking for the 60 as more tariff money keeps pouring in. The Red Book Group's going to update their weekly U.S. retail sales data Tuesday morning at 7:55. We've been running about 5% there. S&P Global Group's going to release the final, and the word is final, July service sector PMI at 845. The ISM gives you they're going to release their U.S. service sector index, a single number there, as I call it, for 9. And then the API private sector numbers are going to come out for the oil stocks and obviously the refined products. We'll see what those look like as well. But as we get off, you have to understand a couple of things. August is traditionally a choppy month. It is not a month where the stock market has historically said, oh, this is one of the best months of the year. It's probably the other end of that sector. That's for stocks. I'm focused on what the metals are going to do because I happen to think the inflation story has to show up sooner rather than later. As I'm listening today on CNBC, they're talking the price of jeans going up a little bit. They're talking this, they're talking that. I don't hear any talk that they're going to reduce prices. I'm hearing it's all a question of when price points are going to start passing on to the consumer, how it's done. We all know that if you go out and you buy some of the candy bars, they're smaller, but the price stayed the same, right? I see that in products all over the place, and you should pay attention. When you step away of talking about inflation, how many of you now go to any of the Kroger stores or others, and the brands are the store brand? And that's one of the way they try to fight this inflation, by making those brands a bit cheaper. I mean, you got Ore-Ida potatoes right here, and 30, 40 cents for the same size bag. In a private brand. I'm not saying it's worth more or less. I'm just saying there's ways this is all going on, and that's going to come back to the gold market over time. So those are the things I look there. As for the stock market, I think what you did is you've entered a period now of this. I do not expect we're going to keep going straight up right here. I wouldn't be surprised that we have to consolidate the gains that the market has recently made. And when I look at it, when you just look at a weekly chart of closes only, you're seeing that develop in the chart right now. You're certainly seeing it on a daily bar chart as you made a high just 4 days ago, then the bottom sort of fell out of the market, and you can see it when you put on the swing line from the higher high to the lower low. Where's the battleground? It's clear. And I'm going to step back here so you can, well, I can't do it. I didn't hit a button right there. It'll move this one. But you came down 3 days ago, stopped at the 18-day average. Then you rallied back to it. Today, you're right back again into that area, and that's what you're fighting. Forget where the closes are. Just look at how the market's pivoting around that number. And where are the borders? The upper Bollinger Band, the lower band. So the market's gone into a swing stage that you haven't done in a long time. You have to come back here into June, mid-June, to find that again. So we've gotten to the point where in early August, it's doing that. And I think it's a warning sign you're going to flip around. Now, to say no to that, like it did here, where it flipped back and forth, you got to start coming out of these highs. But those weren't all-time highs. Those were just recent highs. This would be an all-time high, and getting through an all-time high is very different than a prior high. There's a difference between the two. When I look at the momentum, what the market was calling for when we stepped back over here, yeah, this one will let me do it on the chart. When you lost the bullish momentum over here, the odds favored you were at least going to go to the 18-day average of closes. You ended up going to the Bollinger Band, and you're pulled right back into that sideline. I think you've got a sideways market for the time being. How long it'll last, don't know, but that's where I think you're at right now. In the NASDAQ, it's the same thing. You lost the momentum. Market peaked out at the upper Bollinger Band, but it had been running it for a week and a half while I was out of town. And I would have been saying here, I think the pros are not buying the highs into the Bollinger Band. You only stay over that number, in theory, 5% of the time. So if you're playing, it's good, the one time it's going to do it, or the 5% of the time, well, that's how they build Vegas. You know, you think you're going to win everything. The smartest winners there put their money down, let it all go, enjoy a show afterwards. If you win, spend it, because it's going back to the table if you keep gambling. Higher high, lower low, and you can see where the market is with that. In the Dow, you came down. You see how the market fell back here? Where did this market stop? This is so important. The 200-day average, the main moving average that traders look at a lot of times in what stock indices will do, it fell right to it, it held it, you're getting a bounce. But the difference here, and there is a slight difference, you haven't been able to get back up to the 18-day average in a while, and in the Russell it's the same weakness, and this market sliced right through the 200-day average. I'm going to repeat. The weakest of the indices, as much as people keep saying, I want to rotate to the lower price stocks. I don't want to chase the ones that have been going up. It's called a rotation. I get it. It hasn't paid off if you look at the index. I'm not saying individual stocks haven't. I'm saying the index as a whole, it's still the weakest of the indices. When we go to the DAX, I remember telling you just before I left on my vacation, I wouldn't be surprised if we hit that Bollinger Band and you completely let go of everything after I left. I was watching it on my vacation going, darn it, that was a pretty neat call. Now what do we do? Well, the market's coming down. You've taken the market into a downtrend, and it's the first one. The market stopped at an old break low back here. Should find some support in this zone. Now we're getting to the interest rates, and as you know, the market is a futures market, looks at the future and prices in the future, not the past. This market is saying interest rates, the next move, are going to be down. That doesn't mean you can't get corrections along the way, but there's been a change in the market, and you can see it. And you're starting to push out on the 5-year note. You're not embedded, you're just overbought. And again, I'm going to repeat that Vegas scenario. I teach you don't buy over Bollinger Bands. You can generally buy better within the band. It might be at a slightly higher price, but the odds of it staying over the band, 5% of the time. When I come to the dollar index, you came right on up to the 100-day average in the Bollinger Band. Come on. That is where markets, especially if they're not embedded, typically see the pro liquidate positions. I didn't say go short. I said liquidate. I believe that when you're over the 18-day average, you have an automatic upside bias. But getting to a point on a chart where you're into key moving averages in a Bollinger Band, very important. And the flip-flop is occurring as you came down in the euro to the 100-day in the Bollinger Band, and you're turning back towards the 18-day average of closes. But do I see trend trades here? Not one. I want to be ultra clear. Not one of everything I've just shown you. That doesn't mean I'm not friendly markets. It doesn't mean I'm seeing trend per se trades in them. I'm seeing momentum trades for certain, especially on the interest rate sector with the falling rate. I'm seeing momentum trades in the currencies that fell against the US dollar, and now they're trying to fight and determine, do they have any, was that it? Do they have any upside, or are they going to fall further against the dollar? I see Bitcoin, which worked its way while I was gone from the upper Bollinger Band down to the lower as a correction. I don't think the thing's over. I keep watching how it's going to implode in prices and all. I don't buy any of that. This is a new asset. It is an asset that doesn't pay interest in most cases. They're trying to figure out ways, and some are doing it, in convoluted methods. Okay, they may get that done. But the fact that people want to get them, the fact that there's a limited number and that number will go to zero eventually, and the people that buy them tend to hold them, means you've got something that as they come into vogue, there's less and less to buy. That's the way to look at it. When we look at the energy market, I was reading over the weekend some analysts, and they're going, well, that 547,000 barrels, it's known, it should have no effect Monday. And I started laughing. I'm going, really? Okay. You're telling me you're going to put more oil back on the market and it shouldn't have an impact because the market's discounted. I didn't buy that. And that's where the market's gone. It's gone back to the neutral territory of the 18-day average to 200, and now it's going to digest what this all means. Overall, I think the chart looks more constructive than not, but certainly that's enough of a break. These are big numbers. I'll let the other people think that. And you knew that OPEC meeting was coming, and you knew the odds were this was going to be. And you'd been at the Bollinger Band tops. I mean, I see the pro having come out of the market and letting the other guys take on the risk. Gasoline is an interesting chart. It keeps fighting a battle against the 200 and the 100-day average, gives you a pop and just can't seem to hold it for more than 3-4 days at a time and gives it up. It even here had the problem. It just seems that when we got to 235, the whole rug was pulled on this market. And the question is, with all these extra barrels coming of oil, what do you do with them? Are you putting them in supply, or are you going to refine some of it? There's going to be supply of gasoline, and you see in natural gas, I'm cracking up every day. I keep reading, like Brazil, what could they buy from the U.S.? They could buy natural gas. None of these companies, they don't want it. They look at how much it costs to ship it to them, where they're at with it, so on and so forth. And I'm not saying that it isn't a good play for the president, but prices coming down and you're not attracting buying. That isn't a good thing when we know for trade, a lot of nations said they were going to buy our energy. Does that look like it? And this is one of the major ones that the U.S. is trying to sell to them. So until this trend ends, it ain't over. It's embedded. That's bearish as can be. The pattern is just consistently bearish. Wherever it's going to end up, it's going to end up. You'd have to lose the red reading, which is sitting here right now at 807 over 21, to tell me, okay, that's it for that wave of selling. Until that happens, on rallies, good hard ones especially, you'll probably see that get sold. In addition, you don't have bad heat waves in the U.S. It is August, and you're probably still putting some natural gas in the storage. Interesting time for everything. We'll see what this Thursday's report looks like. Want to remind you, I've started my mailbag in the morning now in my paid-for research. So my subscribers can write me. It could be questions on spiders, futures, whatever it is, money management. And I take a moment out and I answer them right there, and we move on. So something new, and I think you'll like it. I want to add more and more to this for you and see what we can get with. Got the first set of questions, so I'll be answering probably some tomorrow for you, at least one of them. All right, go to IraEpstein.com research. That's where you sign up for this. I cover 40 futures charts, specific buy and sell recommendations, most of the time based on the daily charts, but a little bit of everything. And when you get my written reports, as you'll see, I lead you into ideas for the next thing that I think is coming in the futures markets. And that's the goal of that letter. So IraEpstein.com research, there's icons up here. Give it a click, and I'll catch up with you in the other videos tonight. And of course, the morning video in the morning. You take care.